shiny promises, zero verified regulation. FortisMiner.com presents itself as a cryptocurrency investment and mining platform offering users passive income and high returns through digital asset operations. The website speaks confidently about mining infrastructure, automated profit systems, and financial growth. It uses modern design elements and typical crypto industry language to create the impression of innovation and legitimacy. However, once you step away from the marketing surface and begin checking verifiable facts, the structure becomes far less convincing. Serious investment platforms that accept public funds operate under clear legal supervision. They disclose the legal entity behind the brand, provide verifiable license numbers, and can be found in official financial registers. In the case of FortisMiner.com, that transparency is not clearly demonstrated. In practical terms, FortisMiner.com shows multiple characteristics commonly associated with high-risk investment schemes. The absence of confirmed regulatory authorization, limited corporate disclosure, and vague operational details significantly increase investor exposure. The issue is not about dramatic accusations, it is about structural risk. General information indicates that the project operates under the domain FortisMiner.com and positions itself as a crypto investment or mining platform rather than a traditional regulated broker. No clearly confirmed financial regulation is publicly verifiable. There is no prominently displayed license number tied to a recognized supervisory authority. Details regarding corporate ownership, jurisdiction, and enforceable investor protections are either minimal or unclear. If minimum deposits or profit plans are offered, they are typically framed as investment packages rather than regulated financial products. That distinction matters because investment packages promising fixed or high passive returns often fall outside regulated brokerage models. When assessing licensing and regulation, the only reliable method is independent verification through official databases. Legitimate brokers and investment firms can be found in the registers of authorities, such as the Financial Conduct Authority at register.fca.org.uk, the Cyprus Securities and Exchange Commission at csec.gov.cy, the Australian Securities and Investments Commission at connectinline.asic.gov.au, the United States Securities and Exchange Commission at sec.gov, and the Financial Industry Regulatory Authority at brokercheck.finra.org. If a platform claims authorization, the legal entity name, license number, and approved domain must match exactly. Verification through official registers does not confirm the presence of a clearly matching active financial services license connected to FortisMiner.com. This does not automatically prove fraud. It does, however, mean the platform cannot be considered a regulated broker or supervised investment company under recognized financial oversight. Without confirmed regulation, there is no enforceable framework for capital adequacy supervision, no mandatory segregation of client funds under a regulator, and no guaranteed access to compensation schemes in case of insolvency. In the event of disputes or withdrawal issues, investors may have no structured regulatory authority to turn to. The service model promoted by platforms like FortisMiner.com often revolves around cryptocurrency mining, automated trading systems, or fixed-yield investment plans. These models frequently promise stable daily or weekly returns. In real financial markets, guaranteed or consistently high returns are statistically rare and always accompanied by transparent risk disclosures. When a platform emphasizes predictable profits while minimizing risk explanation, the imbalance itself becomes a warning sign. Crypto mining operations, if legitimate, require transparent infrastructure disclosure, verifiable hardware operations, energy cost data, and audited performance records. Many high-risk platforms use generic descriptions of mining farms without providing verifiable technical proof. In such cases, the investor is effectively transferring funds based on marketing narratives rather than audited financial statements. WAS and technical analysis can provide additional context. High-risk investment domains are often relatively new, registered through international registrars, and protected by privacy services that hide ownership details. While privacy protection alone is not evidence of wrongdoing, the combination of hidden ownership, unclear corporate identity, and aggressive profit marketing significantly increases the risk profile. Established financial institutions typically operate under transparent corporate structures with long-standing digital histories. Legal transparency is another critical factor. A legitimate investment firm clearly identifies the full legal name of the operating company, its registration number, physical address, governing jurisdiction, and applicable regulatory body. It provides detailed client agreements and risk disclosures written in enforceable legal language. If forexscam does not clearly present this information in a verifiable way, investors are left without meaningful legal protection. Several common red flags associated with unlicensed brokers and investment scams can be observed in similar projects. No confirmed financial license in official regulatory registers. No clearly verifiable supervising authority. Limited corporate transparency. No confirmed investor protection mechanisms. Elevated probability of capital loss. Potential withdrawal issues if internal policies override client requests without regulatory accountability. This pattern does not require exaggerated language. It follows a simple logic. When regulation is absent, external supervision is absent. When supervision is absent, investor protection mechanisms are not enforceable. When protections are not enforceable, the investor carries the full risk. Understanding how to avoid similar investment scams is essential. Always verify regulatory claims directly through official government registers, never through links provided solely on the platform's website. If a company claims to be regulated in the United Kingdom, check the FCA database independently. If it claims European licensing, verify through CISEC. If it claims Australian authorization, confirm through ASIC. Real regulators maintain official searchable databases that cannot be replicated by imitation websites. Be cautious of platforms offering guaranteed or unusually stable crypto returns. Cryptocurrency markets are inherently volatile. Fixed daily or weekly profit claims are not consistent with real market behavior. If returns appear predictable and risk-free, the structure deserves scrutiny. Pay attention to corporate identity. Legitimate firms publish detailed company information that can be independently confirmed. Anonymous ownership, generic addresses, or unverifiable company names increase legal uncertainty. Be wary of pressure tactics. If representatives encourage larger deposits, promise accelerated profit growth, or suggest reinvesting immediately to unlock higher tiers, this behavioral pattern is frequently associated with high-risk investment schemes. In conclusion, forexscam cannot be considered a verified, regulated broker or supervised investment firm based on publicly verifiable information. The absence of confirmed licensing in official registers, combined with limited corporate transparency and profit-centric marketing, creates a high-risk environment for investors. The platform may present itself as innovative and modern, but without regulatory backing, investor protection remains uncertain. Our experts recommend refraining from any financial interaction with this project until verifiable regulatory authorization and full corporate transparency are publicly confirmed. In finance, regulation is not a formality. It is the line between controlled risk and blind exposure.